Good morning and welcome to the latest live Development Finance Today virtual roundtable in partnership with Beaufort Capital. Thank you very much for joining us. My name is Beth Fisher, editor at MediaNet, the publisher of both Bridging and Commercial and Development Finance Today and the bi-monthly print Bridging and Commercial magazine. Today, we will be discussing how student accommodation will evolve by 2030, and we will consider the difficulties in future-proofing a student scheme and what and where the next generation of developments might be in 10 years' time. Most of you will be aware that the purpose-built student accommodation market has been a resilient asset class over the past 10 years and often referred to as the golden goose of investments, with demand outstripping supply. Over the years, it has prospered in spite of a global financial crisis, the trebling of tuition fees, and a decline in 18-year-olds. COVID did, however, cause a blip in the market last year. We saw uncertainty around term dates and application procedures, ongoing international travel restrictions, and the strategy or lack thereof of delivering A-level results. There was a concern around whether students still wanted to attend what is often described as the social opportunity of a lifetime during a socially distanced era. Therefore, developers, lenders, brokers, and operators in the space were holding their breath in anticipation of finding out the extent to which the crisis would impact final student numbers on campuses and consequently the uptake of student beds. Positively, demand has remained strong, and I understand Joanne Winchester from CBRE has some figures to share with you all on that later to paint a better picture. Thankfully, with Boris Johnson's roadmap out of lockdown, the PBSA sector is likely to be injected with even more confidence and stability going forward. Today, we have a fantastic lineup of experts in the PBSA sector who will kick off this event by giving you their knowledgeable insight into this particular market from their own unique perspectives. Between them all, they cover funding, developing, operating, and valuing, so I'm really excited to hear what they have to say and where they think the sector is heading. There will be a panel debate after the presentations, which include an audience Q&A, so please do send your questions throughout today's event for our panellists to answer. Now is the perfect time for me to hand the baton over to the host and sponsor of today's event, Mark Quigley, Managing Director at Beaufort Capital, who will kindly talk about the PBSA market from a lending perspective. I will now leave you and introduce, he will also introduce the other panellists. So Mark, the virtual stage is now yours.
Thank you very much, Beth. I very much appreciate that. Ladies and gentlemen, I'm delighted to be able to speak to you today. I've been involved in the student accommodation sector, financing it for over 20 years now. And during that time, I've been able to see how the student accommodation product has evolved, which is quite significant over the period of time. I'd like to take you back, if I may, and just sort of canter through what experiences I've had, just to give you a flavour, and then we're going to take it up to the present day. First instance, I used to get involved very much in financing student accommodation schemes, which were relatively basic in their approach. It became very clear early on that having a sort of standard 6-bed cluster was the ideal sort of paradigm for students. And what would this bring? It would basically have 6 students living in their own rooms, typically with ensuite facilities, but then sharing a kitchen and potentially some community rooms. This worked well for a good while, and when I first got involved, sort of 1999, 2000, that really was the product that most of the companies decided was appropriate. And I financed a lot of the major players. My main background was at Barclays Bank. I was there for 30 years, and I was in the property team from the mid-90s onwards. And actually at that stage, sort of it was a side of the desk activity really. I was just doing the odd student accommodation deal here and there, and then it became a full-blown part of my working life. But in those days, supporting the likes of UPP and Unite, who are very much the market leaders, one very much on campus and the other trying to build as close as they could to the sort of front door or the back door of the university, that worked extremely well. And I think it was fair to say it was a case of build it and they will come. The alternative, the student accommodation that was typically provided by the universities themselves, had often been built in the 60s, 70s, and was beginning to sort of crumble and needed replacing. So it was a real benefit to the sector when these companies started working and building effectively better quality accommodation. Moving on from there, we were obviously running up to the global financial crisis became a bit of an issue. I was fortunate enough to be able to continue funding throughout. And indeed, during the height of the GFC, I was able to keep lending. And my little team at Barclays, a team of 4 of us, grew to a team of 7. And we were able to support a whole host of big players in the sector that were looking at this, the likes of Blackstone, Carlyle Group, and so on. And also different products were coming to the fore. And I remember the first sole studio scheme that we financed was for King Square Studios in Bristol, for the people who are currently running a new company called Crown Student Living. And they have continued to go on from there. But it was the first scheme, and it brought a very different type of product to the market. Solely studio, really understanding communal areas and space, with the likes of cinema rooms and so on. So it was cutting edge of its time. This continued throughout and into the next few years, and we ended up seeing different schemes again. UPP brought into play a different product for townhouses. So effectively we had cluster rooms, we had townhouses, we had studios, and sometimes we've had a combination of these. But the biggest issue that has been faced in recent times, if I go back to the very beginning, because people that were involved in the sector were essentially property developers, they worked on the basis that if you could squeeze in as many rooms as possible, then that would increase the value and you'd have a better asset all round. Then when the thinking developed further, it became very clear that actually moving into a different model, which included the likes of different spaces, whether it be, as I say, cinema rooms, gyms, swimming pools, and so on, it became a very different product. Beaufort has been funding student accommodation since I joined in 2018. And in that time, we have seen, again, our clients moving into different types of products. Here is a picture of, or a handful of pictures of a scheme that we funded shortly after I joined. This is for Base. It's a scheme in Glasgow. And the lovely story there is that, I joined Beaufort in 2018. We financed this in June of that year. And it was about a few hundred metres from where I used to go to school. I know you won't recognise the accent as being Scottish, but I'm actually a Glaswegian. And it was lovely to be able to support something in my hometown. It's been an extraordinarily successful scheme for the Royal Conservatoire of Scotland. And as you can see from the pictures, whether it be a gym, that lovely outside area which the students can use, the stunning building itself. And the lovely thing is it's only 100 metres from the back door of the Royal Conservatoire, so a very positive scheme and very well let in its early years. Moving on from that, we've supported a company called Torsion, and they've built a couple of cracking schemes which we financed, one in Sheffield, and this one is the Red Queen scheme in Coventry. Again, you'll see lovely use of all mod cons, understanding space, making great use of the opportunities they've got there. And again, a fully let scheme, which we were delighted to support. We remain very supportive of the sector generally, and indeed Beaufort, in addition to supporting student accommodation, we can fund all asset classes all across Great Britain. We actually had a strategy meeting at the beginning of the year to discuss where we would focus our energies in the current year, and of course in the wake of the pandemic and so on. And the 3 areas that we highlighted were student accommodation, care homes and retirement living. But student accommodation has been dear to my heart for over 20 years, and I'm sure will continue to be in the years ahead. That's it from me, and I'm just going to now introduce our first guest speaker. He is Martin Blakey, Chief Executive of the national student housing charity called Unipol. He's been involved in student accommodation for over 30 years, and he's developed a portfolio of around 3,500 beds in that time. Martin established the government-approved national codes, which sets out how the accepted standards for the industry now work, and he continues to work closely with the government. Martin, over to you.
Thanks so much, Mark. And actually, in that little bit of blurb I wrote you, I think I put in brackets, works closely with the government insofar as anyone does. So I suppose we could just start by reflecting on possibly the worst decision that this government has taken yesterday to not let students go back until May. I think all the other decisions were dictated by the virus, but this one is dictated by lowering the profile of universities in the context of the rest of the economy. So a bit of a sad day and a bit of negative reaction. I think the Minister's having a hard morning. As Unipol operates the government national approved codes for the private sector, you'd expect me to say something about that kind of voluntary regulatory system, and also how the government sees the purpose-built student accommodation sector. It takes the government ages to work out what's going on, and they are really light years behind the kind of funding models and the asset class, which clearly defines it as a sector. Just worth remembering that the private sector PBSA came into being, and Mark just mentioned it, because universities were suffering from a chronic shortage of accommodation. It wasn't unusual for students to spend the first 6 or 7 weeks living in the sports hall on a put-me-up. And also, university accommodation was often very poor quality. We tend to think, you know, that wasn't the case, but university standards were pulled up by the private sector. And we're still sweeping up the mess from the 1990s, when a huge expansion in student numbers saw thousands of off-street properties bought up by smaller landlords without planning, quickly and poorly, and converted really for dense use in communities that had no infrastructure to support that. So the private sector, just to let you know, the code was created in 2005, 19,000 bed spaces was the total number when we started it off. And they were owned almost entirely by Unite, Opal, Victoria Halls, Liberty Living, UPP and CRM. So I think there's 3 of those going, and the others have been swallowed up, one liquidation, and have transmuted. We currently cover in the code 340,000 bed spaces, 103 providers, 2,170 different developments, 96 different locations. And by the way, we always think of PBSA as being really big buildings, but in reality, if you just take an average, the average building is 156 bed spaces. By the way, I think new buildings are increasing in size, and that's a reflection of land cost. I would just say that I thought people had learned that very big buildings often come with big diseconomies of scale later down the road. The top 6 providers at the moment, and UPP are out of this because they're not technically private sector in most of the cases. It's linked in with universities, which is Unite, IQ, Homes for Students, Student Roost, Fresh Student and CRM now account for 53% of all the bed spaces in the code. So if we ever want to know what's going on, we just have to talk to those people. And just to counterpoise that, the 10 smallest providers account for 0.1% of all the student bed spaces. So we have some very, very small providers indeed. We refresh the code every 3 years, but this year is going to see the first major revision of the code that was last approved by government in 2006. So although you should be fortunate that it doesn't involve any of you in lots of work, that's a chunk of work. And the new code is interesting because, and it will be subject to a whole host of consultations, because in a way it reflects what's becoming a key part of providing the student accommodation offer. Mental health and well-being support, better arrangements for those suffering from late construction, a refining of facilities and costs for those with disabilities, much more service rather than facilities orientated in reality. And that's going to dovetail into a whole raft of new legislation that's on the horizon. The Building Safety Act, which will affect us all in a big way, particularly in the construction to management handover. And the Renters Reform Bill, which the government fortunately keeps kicking the can down the road, but it will be important in that the purpose-built sector lobbies for its own unique house standards to be fully recognised. We are not off-street landlords. The pandemic has finally succeeded in persuading the government that the private sector is a more important part of the educational package than they thought, and that students actually move to live away from home no matter how much advice they get from the government. And during the pandemic, the government have reaffirmed that the relationship of those living in the private sector remains comfortably within the landlord-tenant realm. University provided accommodation is very different and is seen almost as an on-campus service with much more government intervention. And with that in mind, you may not think the government's been terribly supportive of the private sector, but I would just suggest to you that it's been reasonably supportive. It hasn't explicitly called for rent refunds. It's stressed contractual obligations, And actually, nor has it got the Competitions and Markets Authority to weigh in with the really unhelpful advice, which it could have done. One other thing to look out for, by the way, which there's a big disagreement in the sector as to whether this is going to happen, I think it might, is post-qualification assessment. If it does, it will hit the scene somewhere around 2023-24. And this is where students apply for university after their A-level results, thereby compressing the whole first year offer into about 10 weeks between A-levels and the start of term. That will have implications for purpose-built providers. Just 3 quick lessons from the pandemic. I would just remind you that I think private providers have little to gain by claiming to be too closely allied to an educational institution. That brings with it obligations, expectations, actually I think possibly even student resentment, and those are the remit of universities. Your brand and identity as an accommodation provider is more important than ever, so don't ever be tempted to forego that. If we could go back to March 20, we might reframe calls for rent refunds into offering more flexible contractual options and reacting to individual circumstances rather than across-the-board giveaways. And by the way, across-the-board giveaways actually increase student complaints. And universities who enter into long-term partnerships to provide accommodation perceive themselves as being left holding the baby on refunds. And they had a little sense of a partnership approach, often from other parties. And that will definitely influence how universities frame these deals in the future. Going forward, as the private sector is now the major supplier of purpose-built student accommodation to universities, I think it's likely that the risk will be increasingly transferred to the private sector with shorter underwrites and shorter institutional linkages. Growth of the sector, however, is fairly solid. So there's a question about how much risk there is in that transfer. Some of this might be about dealing with risks that have already happened. Other than that, I suspect that things will settle down. I think the pandemic will have changed less than people think. Most students still want to go from home to university. That includes living with other students in their chosen town of study. In terms of design, I think outdoor space will be more popular for a while, but it was already gaining in importance before COVID. Competition between universities is fierce, but it's going to get fiercer. So it will be important to develop where demand is growing. And just to remind you, in this year, the Russell Group grew 16% compared to 5% of the whole sector. And finally, as home students are likely to continue to grow for the next 8 years, the purpose-built sector will have to house more returning students. And therefore, we've been talking about affordability becoming an increasing aspect of provision. That doesn't mean all student accommodation has to fit within lower bands, but it does mean that about 20% of it does. And I just end with the figure that is in the latest Cushman and Wakefield survey, and that was that the price of a new ensuite bed was 17% higher this year than it was last year. And that is the kind of rental growth that, if it's not addressed, will eventually provoke a political reaction. So thanks for that, Mark.
Martin, thank you very much for that. Most illuminating, and very much appreciate that. I'm going to now go on to Martin Corbett. I'd just like to say to those listening in, we've got almost 300 people registered. If you've got any questions, please do send them through and we'll get to those after the presentations. Martin Corbett is Chief Executive of Homes for Students. He's a chartered engineer by background, has been in the residential sector for over 10 years. Formerly at Derwent Housing Association, he actually founded Homes for Students in 2015, and now manages over 30,000 beds in the UK and Ireland. Martin, over to you.
Great, thanks, Mark. In a normal year, whatever normal is, Homes for Students brings between 10 to 15 new build schemes to market for a variety of developers and investors. And so it's critical these products are delivered and fit for purpose and future-proof as much as we can envisage. In order to do this, we need to understand what students will want and need in 2030. Next slide, Beth, please. We're currently dealing with Generation Z in our accommodation, and these are the so-called digital natives born between 1995 and 2010. However, by 2030, we'll be dealing with Generation Alpha, born around 2010, a time when the iPad and Instagram were launched. there'll be a totally different cohort, a lot more diverse, tech-savvy than ever before. They'll be used to artificial intelligence, augmented reality will be the norm. And this is the generation that we'll be building for. And they'll have more purchasing choice and purchasing power than ever before. For my sins, I have an 8-year-old son, and so I have a personal insight into Generation Z. I think we need to understand the differences between Generation Z, who are in our accommodation, and Generation Alpha. And the key differences are that Generation Z are very much more formal education, wanted to build a career, hard-working, whereas Generation Alpha are less focused on formal education. They're more around skills, they're happy to learn the skills online, and I think this will lead to more hybrid learning, and undoubtedly the pandemic has accelerated this trend. Generation Z value ownership, albeit owning an environmentally friendly electric car and an energy efficient home, whereas Generation Alpha are happier to rent. They're likely to use autonomous vehicles and more focused on mobility and don't want to be tied down. Gen Z are interested in peer reviews and authenticity. They're more likely to be driven by FOMO, a fear of missing out, whereas Gen Alpha are more focused on experiential, being able to share the joy and fun they're having with others. Gen Alpha are used to frequent disruption as a result of the constant barrage of digital information they have to digest or ignore. And they are therefore more adaptable, albeit understandably with a very short attention span. And certainly, as I say, my son is in that category. Generation Z understand the general needs for corporate social responsibility, but within value for money constraints. Generation Alpha are more likely not to do business with the brands that go against what they believe. And I think that's something that we need to keep an eye on. The brands are very important to them. So what do we need to do to accommodate Generation Alpha in the next generation of accommodation? We've been churning out traditional cluster apartments and studios for the last 10 years, but it's now time to adapt and change. It's worth noting that the pandemic must have been unpleasant for many students cooped up in their bedrooms, some of the cluster rooms being 11.5 square metres in area. With Generation Alpha, hybrid learning is here to stay, and we need to provide better spaces to cater for these changes. For example, bedrooms to have less formal study space, more casual learning and gaming. I mean console tables and beanbags, as opposed to desks and chairs. Bedrooms better designed and bigger. How many rooms have we walked into the end of a wardrobe when opening the door? Not very inviting. More informal study spaces and booths and the like to increase hybrid learning and social interaction. Consideration of club studios or social studios where you have a group of studios and common amenity areas, sort of co-living style, and to give people the options to mix or isolate to suit. The drive for better amenities will continue as Generation Alpha strive for better experiences, even higher speed, 5G, Wi-Fi, and connectivity. In respect of the experience Generation Alpha will expect from the managers, digital events, influencers, social media interaction, as well as physical events organised at the premises and in and around the property, management teams will need to step up to keep up with this sort of tech-savvy generation of students. Generation Alpha are more aware about mental health and physical well-being awareness than any other generation. And they will assess how understanding and compassionate the brand is. Refunding students during the pandemic has demonstrated brand loyalty is important to preserve this brand. Generation Alpha will make an assessment of if property managers are providing an holistic approach to health, exercise, well-being, and dietary requirements. Things like natural planting and greenery will be important. We've got schemes with pop-up cafes to promote local community and healthy food offerings. Providing flexible activity space for yoga, exercise, with tutors and other features which fosters student wellbeing in the property. Investing in local artwork and linking into local community activities will be all important. On a final note, I think the emphasis will change, and developers and investors will need to look beyond just NOI and yield as a sole measure of success, as funds will start to assess these criteria, which link into ESG and will influence where they invest their funds. Thank you.
Thank you very much, Martin. Again, very interesting, covering all those bases of what the future is likely to hold. As I said before, if people got questions, please do pop them in the chat box. Next up is Richard Simpson, Chief Executive of Watkin Jones PLC. He's been developing PBSA for over 16 years now, initially with Unite, which is where I first met him, and Richard ran the property business and was a main board director for 7 of his 14 years there. And more recently, he's been at Watkin Jones. He's now in his 3rd year and is growing the business as we speak. Richard, over to you.
Thanks very much, Mark, and warm welcome to everybody. I'm just going to spend a couple of minutes just reflecting a little bit on some of the key considerations for taking sort of purpose-built student accommodation development forward from here. I've probably got sort of 6 or 7 points, I guess, but first one is just to reconfirm that there's investor appetite for those assets, and I think we've seen a really positive re-rating over the last 5 or so years from global investors to invest in the kind of UK living space. Of course, UK living is student, it's BTI, it's co-living, it's other things too, but for now PBSA is sort of squarely and firmly anchoring that part of the living space, which is a real positive. And why is that? There's lots of obvious points which I can make, but I think the fundamental one is that quite overlooked is the power and influence of actuaries. And when you look at sort of balanced funds and the fund managers looking to make capital allocations, it's actually the actuaries within those organisations and institutions who are deciding how that capital flows. And actually it's the actuaries over the last few years who've been significantly increasing allocations of those balanced funds into real estate. And of course, what's been really interesting is seeing how that capital is actually flowing into what part of real estate. So clearly today, with commercial looking sick, some bits looking very sick indeed, and not a particularly attractive investment necessarily, of course, although of course everything is judged on its own merits, but by and large it's a space to leave well alone. And of course what's interesting with commercial is it makes up the lion's share of all balanced fund allocations into real estate. So to kind of rotate and recycle into other things is a significant amount of capital coming over a long period of time. And of course that capital allocation is a growing capital allocation. So that is a lot of cash coming. And it's coming into the living sector because living is part of the alternatives, and the alternatives are very strong, of course, distribution, logistics, the living space. PBSA is extremely well placed within that. And why is that? Well, obviously, global investors are actually underweight UK resi, have been for about 4 or 5 decades. Lots of very well documented reasons for it. And during that time, of course, they've missed out on some stellar performance, and that is always much to the angst of the fund managers. But it's also looking forward. It's not just the historic thing. Look, we know that resi historically has been a great inflation hedge. That is probably the thing which most people are watching most carefully at the moment. So having cash tied up in resi is a very good thing right now. We've also just got real yield. You know, in this yield-starved world, actually, if you look at the spread between the real property yields to say the 10-year gilt yield, it's historically high. And then the final piece is that the structural undersupply piece for the sector is very supportive. And I think the final thing I'd look at there, just on the investor appetite, is Brexit's done. It's incredible how many pension funds, sovereign wealth funds, have been on the phone since the end of last year, saying they've actually had to sit on the sidelines for the last 5 years, and now they don't. And they're keen to come and invest in the sector. So there's a really good structural tailwind there in terms of capital allocations, which is great. So let's move on then. Let's think about pandemic impact on design. I think I agree with what Martin was saying earlier, actually, which is it's easy to over-engineer the long-term impact on student accommodation, especially when you're in the heat of the moment of a event such as the pandemic. I think, you know, clearly the kind of safety response which is still in play is essential and right, but I don't think there'll be long-term scarring at all on the design, look, feel of student accommodation. And of course, why? Well, I think it's very fair to assume that the vaccine will control and contain the pandemic, and it'll do it quite quickly. And the student experience is fundamentally on campus. It's collaborative, it's physical. That will not change. Therefore, that has negligible impact on design. So when we move on to think about which towns and cities should we focus on, where's the best parts of the UK to be investing your money? And here again, I think long-term structural themes are much bigger than the pandemic scarring. So I would firmly advocate focusing on the top 20 university towns and cities around the UK, because they're the winning universities. They've been taking market share steadily since these student number caps have been removed, and they will continue to do so unless the government steps in to protect, which of course they have at the moment during these sort of exceptional times of COVID, but it's unlikely to remain a focus from the government there. So very much focus on the winning universities, and that's the top 20 towns and cities. Cautious elsewhere, but never exclude elsewhere, because there's always particular supply and demand issues which can be looked at. And frankly, if you come in and put the best scheme at the most attractive rents into the market, it will just take market share. So never discount other locations, but essentially focus on the top 20. Affordability, that's come up from Martin. I agree with him. I mean, clearly the level of national debt is going to have an impact. It is going to be paid for. There are repercussions. Yes, I think it'll be sensitively managed alongside quantitative easing for a period of time, but nonetheless, there's going to be an impact. And therefore, affordability, as it's always been, is a very, very big issue. And therefore, naturally focused on clusters over studios, although, as ever, there's always a place for a really good studio scheme. But I think in the main, the sort of more affordable end of the clusters is the right place to be investing. And then just thinking about fire safety, there really is zero risk appetite on fire safety, although sadly you can never have zero, but perhaps more accurately say negligible risk appetite. But I think if you say zero, I think everybody gets what you mean. That safety has got to be at the heart of the building. Every building must ooze building safety. Comprehensive fire safety systems, inert cladding systems, sprinklers, the dry or the wet risers, multiple stair cores, plenty of fire drills so that all the students know exactly what to do in the event of is essential. And it needs to be at the heart of almost the brand of the building. That will never be compromised. And then I guess in a way linked to it is just the sort of ESG aspects of the buildings themselves. And there's a big momentum on this anyway. But nonetheless, we need to build and manage responsibly. What does build mean? It actually means using ethical supply chains and being able to evidence that increasingly, minimising our carbon footprint, of course, perhaps eliminate by 2030, increasingly move up the curve on the BREEAM sort of tag which comes with the planning permissions for these schemes as well. And then on the management side, of course, it is about responsible management, so the recycling, the responsible tenant utility consumption, etc., etc. Plenty of initiatives and areas of innovation to come in through product and the building management systems there too. So I think on that note, that was a canter. Look forward to questions, but I'm going to hand back to Mark.
Thanks very much for that, Richard. Very thought-provoking as always, and yeah, sets us up nicely for those questions, as you say. Next person in is Jo Winchester. She's an executive director at CBRE and has been one of the leading advisors and values in the student accommodation space for many years. She's had 18 years in the sector. Jo's team works with all leading active investors, developers, owner-operators and lenders, and looking to deploy capital in what we still maintain as an undersupplied student accommodation market. Jo, over to you.
Thanks very much, Mark. So I'm going to talk for a few minutes about the outlook for the student sector from an underlying trends perspective, and why overall it still remains a safe home for your money, and why there is still plenty of opportunity in this market from a development perspective. So first slide, please, Beth. So first of all, underlying domestic demand is growing. The 18-year-old population is set to grow between now and 2030 from 700,000 to 900,000, based on well-documented demographic factors. The participation rate has also been growing in England. A report produced by HEPI in 2020 found that demand for places could potentially increase by 358,000 by 2035 if participation rates continue to rise, in addition to the demographic reversal in the birth rate. So based on domestic demand alone, demand for places is forecast to grow over the next decade. As evidence of this trend already, 2020 saw 37% of 18-year-old school leavers enter higher education, the highest ever proportion. And new acceptances into the system were up by 5% for the September 20 intake. And so far, applications for the upcoming year are up by 8%. And all of this is in spite of COVID. These trends are all underpinned by the international standing of the UK's universities as well, of which there are now 18 in the global top 100. Regarding international student applications, applications from EU students are down by around 17,000 last year. However, given Brexit, this is hardly unexpected. However, this is largely compensated for by non-EU students being up by about 17% or 12,500 students year on year. And generally, we feel there is plenty of willingness, but some practical difficulties due to COVID. Overall, the demand sentiment therefore remains extremely strong, underpinned by key facts and recent evidence. Secondly, supply is not keeping pace with demand. Our first chart shows that most university cities still have headroom from a development perspective. The orange dots represent the total market adjusted for those living at home and other groups. And the bars represent the total current supply and pipeline. So opportunities for further development based on supply and demand imbalance still exist in most cities. To further illustrate the big picture, our second chart shows that PBSA completions nationally have been reducing since 2017. This is because planning policies in many cities unfortunately do not favour further development in the student market. And more stringent criteria are being applied, including the need to demonstrate support from universities on location, affordable rents, and affordable housing contributions, which potentially affect viability. Wider housing pressures are also clearly a driving factor. Most cities are also major employment centres and have acute shortages of C3 residential housing, both to rent and to buy. As has always been the case, PBSA is not particularly popular politically, and most cities want to be seen to be meeting the housing needs of their general population as well as students. For this reason, we increasingly expect to see student accommodation developers applying their expertise to the related build-to-rent and co-living sectors. So, to summarise, we have a combination of rising demand and restricted supply nationally. Thirdly, and finally, returns from student accommodation over 5 years and 10 years. We have the final slide, please. Over 5 years and 10 years have outperformed all other sectors except industrial. And in the year to September 20, PBSA was the strongest performing of all sectors, including industrial. This is due to its generally resilient demand characteristics and low volatility. 2020, amazingly, also saw the highest investment volume in PBSA on record at just over 6 billion, which is comparable in size to the US PBSA investment volumes. And although that figure was dominated by one large platform deal, the sale of the IQ portfolio, I would just mention that that deal closed in lockdown. To summarise, In spite of both COVID and Brexit, the view from here is that underlying trends supporting student accommodation remain very robust. But due to the shortage of sites and the bigger picture of housing shortages, we also expect to see more student developers using their skills to expand into BTR and co-living. Thank you very much, and handing back now to Mark.
Thanks very much for that, Jo. If we can now get all the panellists on the screen, we can now start the Q&A. But while Martin's joining us, I was just going to pick up on a couple of threads there. Richard, one of your comments was about just building basically what the students want, building good quality accommodation, good locations and all the rest of it. And I absolutely concur with that. You know, we've now seen first generation, second generation, possibly third generation stock. But if you're building the right thing in the right location and giving the amenities that we've been discussing, that will undoubtedly end up cannibalizing other schemes and will just bring the whole sector up. So I think that's a very valid point. The first question, and thank you everybody for sending them in. As we hopefully near the end of the pandemic, talk will naturally move towards lessons learned and focusing on things that the PBSA sector could do better for the future. What, if anything, does the panel think that the industry did well in response to the pandemic, and how will this inform future developments and operations? Richard, would you like to take that one?
No, brilliant, great question. Look, I think the PBSA sector, in stark contrast to the whole of the PRS, was a proper exemplar in terms of a sensible, considerate, mature response, which was very quickly rallying around the needs of the students, providing sort of rebates, refunds, credits, support, working closely with universities, working closely with the NUS, working closely with the local emergency services, and actually being part of the solution, not part of the problem, etc., etc. And I think actually it was interesting if you compare that then generally to the response in the private rented sector. One of the very first acts of the government as we were coming into lockdown was that the government had to put a moratorium on evictions on the PRS side of things, because it could see that there was almost no responsibility being accepted at all by your typical landlord. And I appreciate very hard to be that generic about every landlord across the UK, but that was certainly what was being felt by quite a large minority, and there was a risk it would have got out of control. So I think when you look at the responsibility and the maturity of the PBSA sector generally through the crisis, I think that is a real coming of age for the sector. I think it demonstrates to universities, it demonstrates to any stakeholder that's interested, local communities, councils, emergency services, as I say, that actually the PBSA side of things is a real force for good in terms of university education, and it really is very supportive for students and being really successful whilst they're at uni. And that needs to be embraced, because we all know that 10, 15, 20 years ago, that wouldn't necessarily have been said, and universities wouldn't necessarily have had that view kind of spontaneously about PBSA providers. And I think the whole narrative has moved on significantly, and I think that is a great credit to the sector.
No, I absolutely agree with all of that, Richard. Rather than asking everybody to comment on each thing, I'm going to just choose different questions for different people. Martin Corbett, this one's for you. What do panellists consider to be the growing risk to the crucial China student component, given the growing political tensions over Hong Kong and Xinjiang? Could we see a structural change in supply? And also, will more and more Chinese students be educated in China or virtually and not the UK?
Sorry, I'm on now. Yeah, I think even before the pandemic, there were obviously Chinese numbers were increasing, but I think China has been growing its educational sort of platform, and the pandemic in some ways, the 2 years that we've sort of gone through, I think has made us think a little bit more around these old studio schemes and the fundability. I think probably more in that area. And like Joe said, the next 10 years we've got this big domestic product coming on board. I still think underlying it's UK is a great place to get educators. And what we've got to watch is America wasn't the place to go to with Trump. Now it's doors back open. Australia repairing their sort of relationships slowly with China. And so we just need to be careful that we're not the losers on it. But suppose with the domestic demographic that we've got, we need to maybe target, you know, that is a more affordable product going forward, as opposed to the higher end studio schemes. I think the studio schemes will be safe. You know, I'm not saying that there's any issues with those, but I think really we're certainly targeting other countries apart from China at the moment. We've got a big move on lots of other countries apart from China, and I think students will come from China, but I think eventually there will be a fall off at some stage in the future.
I'm certainly inclined to agree with that. We're certainly also seeing an increase from students from India again.
India, yeah, India, and
big growth there. Yeah. Joe, one for you. Does the market need to fundamentally reassess how it appraises supply versus demand, given the role that HMOs play, and particularly in light of the growing 18-year-old population?
Well, I think there's always going to be people who opt to live in HMOs. The thing is that the number of HMOs has probably peaked because of, firstly, the need to get Article 4 in most university cities. So it's an additional planning requirement to get C4 use. And the amount of further regulation around them, but also the treatment of buy-to-let from a taxation perspective is a disincentive to landlords. And none of these are new themes, but we've probably passed the high watermark of HMOs in most university cities, and the number of them is probably decreasing rather than increasing. So I think they're always going to be a part of the landscape, because some people will choose to live in shared houses, and I think we're always going to have that. But I don't think any new ones are being created in any great number. And so I think that it will be down to the PSA sector to take up, to accommodate 18-year-olds and other groups.
No, agreed. Thank you, Joe. Martin, Blakey, one for you. Do you expect to see more developments in the affordable PBSA space going forward, or is there still high demand for luxury, high amenity student accommodation?
Well, there's both, and it follows on. It's not either or, and it follows on a bit from the point you've just had, that what's happening with HMOs is that Article 4 has put a corset on that. And in fact, the number of students in HMOs will decline, because HMOs are subject to professional renting competition. So if you look in areas like Brighton, you can see less and less students in HMOs. You'll often see in planning documents the phrase purpose-built student accommodation is becoming more popular with returning students. And there's no evidence for that. What there is evidence for is that more and more returning students will be living in purpose-built student accommodation. But it is interesting that if you look in the HMO market, then often you've got 50-week, 51-week lets and so on. You go to the big building next door, the PBSA building next door, and it's a 42, 43-week let. So we've got a lot to learn about kind of moving to a returning student model, and they tend to be around a lot more than first-year students. Now, I think the truth is the market will grow, and there will continue to be demand for high-spec student accommodation, and there will be a growing demand for lower-cost student accommodation. Now, you notice I didn't say lower spec, and therein lies the dilemma that actually expectations from PBSA from students are different from expectations of, you know, the little landlord down the road. It's not a level playing field, and you could see that, by the way, on things like refunds. The truth is that, you know, PBSA is part of the establishment and is seen as respectable, and therefore you're under a lot more pressure and you're a lot more publicly accountable. And you know, that's probably how it should be. In, you know, that's what's going to happen in the other areas you're involved in, not like care homes and you know, your professional renting and co-living. So I think there's room for everything. I would just share with you something we're probably going to put on the website a bit later on, that I think, well, two things. David Feeney actually reckons there were 70,000 extra students living in HMOs in their latest report, and goodness knows where they are, because, as Joe's pointed out, planning restrictions are very, very tight in most university cities. So I'm not totally convinced about that. And I think it probably comes from saying, well, we've got this many students and therefore they must have gone somewhere else. You know, it's a kind of reductive scenario. But the other thing is he showed, he had a quality index that Cushman and Wakefield, I'm sorry, John, I'm sure CBRE have got all this as well, but he had a quality index in terms of higher spec accommodation. And I was looking at that in terms of occupancy at the present time, or just before Easter, percentage occupancy per figure, per city, which we're just about to make public. And it was interesting that the higher quality stuff had higher levels of occupancy. So that's interesting, isn't it? That if you live somewhere nice, you'll live there more. And I think that's a fairly solid conclusion. Could I just pick up very briefly, and then I'll shut up, the values point that was made by Richard. I think values are going to be terribly important. And you know, that's about sustainability, Martin mentioned that, ethical sourcing. You know, I think that will be very important. Just be careful not to oversell your values, you know, in the sense of saying things that aren't quite true. I'm just reminded of one provider who had a price promise this year, but when you clicked on the price promise, there was no promise there in the details. So, you know, some of this is very simple, but I think students are looking for those kind of values, particularly in sustainability and ethical.
Excellent. Thank you very much for that, Martin. I'm just going to ask each of the panelists just for literally one sentence on their overarching view of what the remainder of the decade will hold for the sector. And before I do that, I've spoken on many conferences and panels over the years, and I've often been asked the question, Mark, do you think that PBSA is now running out of steam? Is this the end of the road? And I've always responded in the same sort of way, which is that without any crystal ball, I've always taken the view that I can see another 10 years of growth in the sector. And where am I getting that from? And it's the fact that we've got these crumbling estates at universities all around the country. It's the fact that the first and second and third generation stock will at some stage be bettered and will need replacing and so on. And I still think it's got a great way to go. But just going around the table then, Joe, what would you say?
I think all the trends support it. It suggests there's still demand and opportunity, whichever way you look at it. I think affordability is an issue going forward. And I think it's still a great market to be in, but it's getting harder to find good sites in the right locations. But that also does tend to support values as well. So, I mean, I can't see the market abating really. I think that it will continue to be a popular and well-performing sector.
Lovely, thank you for that. Martin Corbett?
Yeah, I think it's, the next 10 years is exciting as domestic student numbers grow. Our business plans to grow to 50,000 beds by 2025, and I'm very confident we'll get there, to tell you the truth. I think, like Joe said, affordability is an issue, albeit students have got, you know, domestic students have got a lot of cash as well. So I think product design will be critical on new schemes coming on board. But there is a lot of older buildings now moving out of the sector as well. And we've noticed recently probably 5 or 6 being redeployed into the supported living, homeless sectors. And so I think, again, that will support, you know, the sector itself as this first generation stuff comes offline, really. A lot of university stock as well is pretty aged still. And they're going to be looking themselves now, I think, to do a lot more outsourcing if I was a betting man, because they don't have any money to do, you know, to spend on their academic facilities.
Indeed. Okay, thank you. Richard?
To me, I've got sort of 2 words in my mind. One is about maturing and the other one is growth, and it's unusual to say both alongside each other. I think the maturing one we've covered quite a bit already. I think the sector's really come of age. I think it's time to continue to sort of do that and flourish. And it's all been said about sustainability, about values, about ethics, about responsible capital, responsible management, etc. It's a really important thing for the sector over the next period, over the next 10 years. But look, alongside the maturity, there's also growth, and I would just illustrate it very simply, which is forecasts are saying there's probably going to be another 300,000 students in the UK than there were when the academic year was undisturbed, I don't know, 18 months ago, by 2030. Now, 300,000 students, that's quite a lot. And if you think about how many corporately provided PBSA beds have been built over the last 30 years, it's about 300,000 beds. So effectively, we're going to see growth in student numbers in the next 9 or 10 years, which is the same size as the entire corporate PBSA sector that it's managed to deliver in 30 years. That's how much growth potentially there is to come.
That's brilliant, Richard, and thanks for bringing that to our attention. Martin, anything else from you?
Well, just following on from Richard's point, that this is about fundamental demand growth, and that's about the higher education sector getting bigger. And most of the projections is that it's going to grow something like 5% a year. There will be a bit of afterburn after the pandemic, where more students have gone to universities, and that will solidify into greater demand to go to universities. There's not a lot else on offer. I just sound the cautionary note that so long as the government doesn't intervene, and I would say the biggest risk to the sector at the moment is the government does intervene and starts looking at student number controls and so on. The government's got a really schizophrenic view of higher education at the moment. In theory, it's really pushing for more international students. You know, if you look at the government's international education strategy, it says the target is 600,000 international students. And in fact, they just changed that to say at least 600,000 international students. Now, you know, footnote, beware of government targets because they're not always met. And they're going to look at ways of trying to make undergraduate home study cheaper. So they're the dynamics. Let's hope that they can think of a way of making undergraduate home study cheaper without restricting numbers. At the moment, I think the government is adopting a bit of a hands-off area, but watch the Treasury. So that's the real fundamental point.
Thank you, Martin. I'm just conscious of time. We're at mid. Beth, do you want to wrap things up for us, please?
Absolutely. We have just hit 12 on the dot, so I will kindly bring this event to a close. That was a really fantastic discussion, everyone, and there were some great questions asked by the audience. I just had a flurry of further questions around sustainability and affordability, a topic that seems to be very popular with our audience. So any questions that weren't able to be answered today, I will put these forward to the panel after this event, and we will include any further answers for you in our write-up next week. I just want to thank our amazing sponsor, Beaufort Capital, and to Mark for doing a brilliant job hosting today. Also, thank you to our fantastic panel for taking time out of your busy schedules to be here. And I also want to thank you, our audience, for joining us. We will be publishing this roundtable in full next week on DFT for those that weren't able to make today's live event, and also if you fancy replaying anything you might have missed. So if you enjoyed this one, make sure you attend our next virtual roundtable on Thursday, 22nd of April, where we will be discussing how to use bridging finance to acquire and fund refurbishment projects. We're hosting events almost every week this year, so if you'd like to sponsor one, make sure you drop me an email at beth@medianet.co.uk. Spaces are booked up until mid-July, so get in touch soon if you are interested. And also, for more insight and news on the specialist finance sector, you can look out for our next issue of the print Bridging and Commercial magazine, which will be landing very soon. Have a fantastic afternoon, and we look forward to welcoming you to our next event. Thank you everyone for joining. Thank you to our panelists.
Thanks, guys. Cheers.
Thank you.
Thank you.
Bye.